This is Alpha. Let's continue our conversation from last time. What tricks does Trump want to play with tariff policy? A record and review of U.S. tariff policy. Part 3. Trump's second term. Let's start with Trump's victory. That is, on November 25, 2024, Trump announced the tariff plan on X. The original words were, "Canada and Mexico must pay the price for drugs and illegal immigration, 25% tariff, and China will soon follow with 10%. Announced that after taking office, he would impose a 25% tariff on Canada and Mexico and a 10% tariff on China, citing the need to address illegal immigration and fentanyl issues. This is Trump's clear statement on the direction of tariff policy after his election victory, which sets the tone for subsequent policies. On January 26, 2025, Trump posted again, reiterating his determination to impose tariffs and criticizing the Biden administration for its weakness. This move was seen as an open pressure on the transition talks. Republican insiders revealed that the Trump team has begun to develop a detailed tariff plan. Although he has not yet officially taken office, Trump has continued to push the tariff agenda through social media posts, which is in stark contrast to the cautious attitude of officials in the Biden administration, showing the urgency of the tariff policy and the priority of tariffs in Trump's policy. The time has come after Trump took office. On January 20, 2025, Trump signed a presidential memorandum on the U.S. priority trade policy on his inauguration day, outlining the trade priorities during his second term and emphasizing tariffs as a core tool. The memorandum requires multiple federal agencies to prepare reports by April 30 to assess trade imbalances and unfair trade practices and countermeasures. It is important to note this timing because the policy of reciprocal tariffs will be announced on April 2, and a strategy will be adopted to implement tariffs first, and then negotiate. Thus, he implemented his tariff policy. This memorandum is a directional guidance document on tariffs after Trump officially took office, setting the tone for subsequent policies. The financial market did not react much to this. The stock market fluctuated slightly, and investors were waiting to see what would happen next. On February 1, 2025, Trump signed an executive order to impose a 25% tariff on Canada and Mexico, a 10% tariff on energy, and an additional 10% tariff on Chinese products. The reason is illegal immigration and fentanyl, which is exactly the same as the first term. The S&P fell about 0.7% as U.S. automakers protested rising costs. Opinions within the Republican Party are also divided, with some supporting trade protectionism and others concerned about the economic consequences. Canada announced a 25% reciprocal retaliatory tariff on $107 billion worth of U.S. exports, including orange juice, coffee, etc. Mexico also promised to retaliate, but did not provide specific details. China's Ministry of Foreign Affairs condemned the move and announced that it would file a lawsuit with the WTO, saying it would take reciprocal measures, but did not retaliate immediately. At this point, China's response is different from that during Trump's first term. This is the first shot fired by Trump on tariff policy since he took office. Forecasts indicate that in the short term, prices for U.S. consumers will rise by 1% to 2%. On February 11, 2025, Trump signed another announcement to restore the steel tariff to 25% and increase the aluminum tariff to 25%. During the first term, the aluminum tax rate was 10%, and the Biden administration canceled the exemptions for the European Union, Japan, and other countries, and the reason was still based on national security needs. The European Union threatened to impose additional tariffs on U.S. goods, and Canada said it would retaliate with additional measures. These policies are expected to increase U.S. steel prices by 5% to 10%, stimulating employment in the short term, but the long-term effects remain to be seen. On February 13, 2025, Trump signed a memorandum requiring the Office of the United States Trade Representative to develop a plan for reciprocal tariffs. That is, setting the same tariff rate as other countries' tariffs on the United States, with targets including China, India, the European Union, and other countries. The plan will be implemented on April 2. The plan was initially considered to be divided into 3 tiers: high tax, medium tax, and low tax countries. Later, cabinet members said they would focus on 15% of the major trading partners. Finance Minister Besant said that factors such as non-tariff barriers and currency manipulation will be considered. Back home, economists warn of risk of global trade war. Stocks continued to fall amid uncertainty. The EU called this a wrong direction, and the UK said it was willing to negotiate and could consider lowering the digital services tax to avoid conflict. This policy has not yet been implemented, but it paves the way for subsequent widespread tariffs and sets the tone for the entire tariff. Market confidence has been hit hard, and the market is pricing in this policy. I think the reciprocal tariff plan is a core part of the U.S. tariff policy and a long-term tone for U.S. tariffs. On March 4, 2025, Trump announced a 20% tariff on all Chinese imports. This policy covers 60% of Sino-U.S. trade goods. At the same time, a 25% tariff will be imposed on most goods from Canada and Mexico. Some compliant goods will be exempted until April 2, but Canada's energy tariff will remain at 10%. China announced that it would impose retaliatory tariffs, which may target U.S. agricultural products and energy. Canada said it would impose tariffs on an additional $30 billion Canadian worth of U.S. goods and threatened to impose tariffs on electricity exports. The U.S. forecast is that consumer prices will rise by about 3%, and companies will need to adjust their supply chains. This allows us to foresee that China-U.S. trade will further shrink and North American integration will be seriously threatened. On March 12, 2025, Trump set global steel and aluminum tariffs at 25%, canceling all previous exemptions. This policy triggered a countermeasure from the European Union, which plans to impose a 50% tariff on American whiskey. Subsequently, Trump threatened to impose a 200% tariff on European alcohol, which exacerbated trade tensions between the United States and Europe. So far, there has been no sign that the United States is willing to take the initiative to negotiate. On March 26, 2025, Trump announced a 25% tariff on North American cars. The goal of this policy is to revitalize the U.S. manufacturing industry. The U.S. auto industry supports it, but is also worried about the soaring cost of parts. The Japanese and German auto industries have been hit hard. This move has a positive impact on potential job growth in the automotive industry. However, the risk of price increases for automobile-related products is extremely high. Let's take a look at Trump's tariff policy so far in his second term. Trump's second term continues trade protectionism. The scope and intensity of tariffs far exceed those of the first term. $380 billion of imports were affected during the first term. In his second term, the figure is expected to exceed $1.4 trillion. Trump's increased reliance on the president's emergency powers, bypassing traditional procedures, has added to the uncertainty. Canada, Mexico, and the European Union have all generally retaliated. As of April 1, 2025, China's response is relatively calm, tending to be a reciprocal countermeasure. Opinions on Trump's tariff policy are quite divided in the United States. The current tariff measures will temporarily stimulate some industries to return to the United States, such as steel and aluminum. However, the cost to consumers will rise significantly, and it is expected that each household will spend an additional $2,500 to $6,000 per year. Economists predict that GDP may shrink by 0.5% to 1%. With the introduction of reciprocal tariffs on April 2, we have all seen that the above policies are Trump's warm-up moves, and reciprocal tariffs are Trump's surprise to the market. It was originally a group game, but ended up being a one-on-one duel between China and the United States. The U.S. tariff stick is without exception, and it hits China hard every time. Although China is a country with a trade surplus, it cannot lose in terms of momentum. Isn't it just a game of the brave that stabs itself in the back? See who can endure the pain better. Through the above, we can present the tariff policy since Trump took office in a running account. We have a particularly obvious feeling that Trump's tariff stick is sometimes a real hit. Sometimes it's just a pressure tool. Some policies seem to attack some countries, but in the end, they are only attacking one country. How does Trump make his choices? I think it depends largely on two aspects. On the one hand, the degree of trade imbalance. The larger the trade surplus of a country with the United States, the more hostile the United States will be to it. The purpose is only to balance the trade. On the other hand, it depends on how close the relationship with the United States is. Under the same conditions, allies have special treatment. If they actively cooperate with Trump's performance and behave positively, tariff exemptions can also be considered. However, if the relationship with the United States is not only not close, but even a competitor, there is no room for negotiation, and an extra threatening tariff warning will be given. For example, warnings against challenging the hegemony of the US dollar and purchasing Venezuelan crude oil. What Trump is playing is not a conspiracy, but an open conspiracy. From the perspective of the lethality of tariffs, Trump's policies can be divided into three categories as of April 1, 2025. The first category is the most lethal. For example, for China, the current average tariff on Chinese goods exported to the United States has reached about 40% as of April 1, 2025. It can be said to be the highest in the world, not to mention the tariffs of more than 100% after the reciprocal tariffs. The second category is for Mexico and Canada. Except for some special commodities, the tax rate is 25% as of April 1, 2025. However, this is very close to the trade balance, and it is estimated that there will not be much change. The third category is a global tariff policy targeting certain industries, such as steel, aluminum, and automobile tariffs. Although this review of policies is rather boring, it is very useful. It allows us to get some accurate references without having to make too much speculation and deduction. When the future is hard to predict, we look to history. At present, it seems that the intensity of the tariffs in Trump's second term has greatly increased, but the protagonist of the story has not changed, and the main plot is likely to repeat the previous pattern. We will wait and see. Regarding the purpose of Trump's tariff policy, everyone can make some judgments based on their own views and make some inferences based on facts, which is extremely important for market investors. I think although the current U.S. stock market is shrouded in thick fog, it is actually an opportunity for astute investors. The limit of Trump's policies is the limit of the market. Okay, let's stop here for now. Personal perspective for reference only. The level is limited, please think critically.